let's welcome on board then Harendra Kumar and chat about what he's making of the market structure and temperament right now. Harendra, hi, morning. Good to have you as always in the show. Let's pick it off from what our researchers were flagging, the large deal by TCS and the Wipro buyback. Wanted to understand if IT is a buy now.
Yeah, so I think there are 2-3 ways to approach the IT sector as of now because the market is not clear on in terms of how the growth is going to pan out. So one macro indicator now is that the Nasdaq and the S&P 500 are recovering and doing well. So generally that means the economic outlook on the US that the market is deciphering is a lot more positive than economists are saying at the moment. So that's one positive. Number two is that the incremental sell notes by most brokerages are not leading to incremental sell-offs, in the IT sector, which means to say that the pessimism is currently priced into the stock prices. So that's the context on the price levels and the valuation that the IT sector is trading. So any incremental positive commentary that will come up will be cheered by the market space. So the risk reward at these price points become very, very positive for investors or tactical traders if they have to play the sector as of now. But our channel checks indicate the next 2 quarters are going to be soft. At least that is what our understanding is at the given moment. So it could be a little long drawn, but levels at these with the characteristics of good cash flow, large businesses, good governance, I think you can make initial entries into this space. So maybe from a negative to a neutral, if you are a portfolio allocator, would be a good stance to begin with.
Okay, so that was about the IT stocks. Next couple of quarters might be slow, but then the long-term prospect is something that you might want to bank on. Harendra, what's your take on Zee Entertainment? There's been a lot of flip-flop around this merger, which has been impending, much talked about. Where do you see it headed?
Yeah, so clearly, the one assessment that the market has made on the Zee merger is they want the merger to go through. So whatever investors we speak to, they like the construct of the merger. They love the long-term prospect of the industry and the space and how the Hindi general entertainment space is going to play out. Now the current regulatory diktats that we keep getting is putting, is like an overhang on the stock at this given point of time, which is pushing out the merger, and creating more doubts whether it will go through. So this is a construct. So at the moment, Puneet Goenka has come out and mentioned that irrespective of his position in the company, the merger should go through. I think this is a very pertinent clarification that is given out, and that should be positively viewed by investors. As we stand today, of course, it's a very dynamic way in which the merger is moving ahead. But at the moment, as of today's clarification, things stand to be positive.
Okay, that's the take coming in on Zee, and we just flagged off what Puneet Goenka had to say in that Economic Times interview of his. And I think the one key thing that stood out really was that the merger will go through whether or not I am CEO of the merged entity, clearly opening the way for if the merged entity, that's Zee and Sony, will have the Goenkas as the CEO and at the helm or not. But in the meantime, let's also talk about, what else has been making news of late. And, we've been talking about as to how it's really the block deals which are taking center stage. And it was no different yesterday as well. That big move on Piramal Enterprises, on Shriram Finance. Kunal, you think further headroom to go in these two names?
Well, maybe not immediate, Asha, but I think for these stocks, they were looking out for some sort of an event to break out. Because for Piramal Enterprise, for example, for the last, I think, 1.5 odd years, the stock was struggling into a major downtrend. There were 3 major attempts towards 200 DMA in this last 1.5 odd years. And I'm talking of it from 1300 levels, where the stock was still a point where the stock was sub 700 mark. And all of those 3 attempts turned out to be failed events. So I think it's a good sign that these stocks have finally managed to break out of their major resistances on the back of some event for themselves. This could probably catapult these stocks into a trending nature. So as I said, I'm not expecting any immediate follow through. A correction of at least 4 to 5%, say over the next 1 to 2 weeks, could be seen to the stock price. But I believe that the stock should eventually move up higher towards 1,050, 1,100 mark, possibly in the next 4 to 5 weeks.
Okay, do remember the likes of Shriram Finance, HDFC, EMC, TIM can also have the tailwind because FTSE has readjusted their free float, and that means there'll be more inflows. That will happen on a technical basis only tomorrow, but that'll start baking into the price from here on itself. So we'll watch out for that as well. Okay, so that was about some of these block deals data that we have seen, but let's also listen in to the rationale and opinion coming in from market veterans on when they see the Sensex hitting that 100,000 mark.
I haven't done the maths, but why not? Really, why not? It's just basic compounding. It's going to get there, yeah. Having been in the market for 30 years, I saw the Sensex at around 1,000. So that's like what you're talking about is a 50, 55, 60% move. So I'd see that there's no reason.
Because I don't invest in any Nifty stock or any Sensex stocks and all. So when I talk about Sensex, that means I'm talking indirectly, I'm talking about my portfolio. So whether index doubles from here or not, that is a different issue. But I expect that this mid caps where I am investing, not I am in the general mid cap category, good stocks should double or triple in next 2-3 years time. And so far index is concerned, I think that index is a counting of 21 is happening index 21,000, 42,000, 63,000. And I think that next stop should be 84,000 in 2 years from now. And of course, 100,000 is just a destination, I think, and miles to go for index.
So for that, my simple thumb rule is compound at about 13-14% and see whether 1.14 to the power of 5 into 66,000, does it become 1 lakh or no? So plus minus, it would be there. Because broadly speaking, if I look at it over any reasonably longer period, the returns have been in this range. So, it doesn't need too much of rocket science. That's why I tweet saying you want 2 lakhs, you just extend the number of years. Because broadly speaking, this number doesn't come only from the fact that historically this has been the range over last, I saw it over 3 or 4 periods, which is 5-7 years. And then I think I did 14 odd years and then some 20 years and then my own my career, which is about 26-27 years, and broadly over every period it is in this range. But this range is not just coming by looking at historical numbers, but by the fact that Indian GDP in rupee terms grows about 11-12%, and then you can add 1 or 2 more percent for the fact that corporate sector might be doing better than the rest of the economy, or you might be doing it from an equity risk premium point of view, that equity returns are normally 5 to 6% more than the fixed income, a 10-year type return of the same country's government bond. These are all worldwide things. And also broadly, we feel that for a large part of the corporate sector, the earnings growth for normal, once they become a little, this thing is in the range of 12, 13, 10, 15%. And then some companies grow at 20-30% for some periods of time. So from all angles, it looks that is the thing. So you just multiply and see, but I would think it would reach somewhere there.
Okay, let's see when that Sensex hits the 100,000 mark or not. But let's talk stocks. And which are the stocks on editor's radar today? Well, it's Cipla as well as JSW Energy. Nikunj, let's start with Cipla because pharma is again seeing a lot of interest. But the stock has moved quite a bit now. What's your take here?
Well, when about 2 months ago, I distinctly remember Avan and we were chatting that to go for Cipla. And why you should go for Cipla? Because that was the time then Cipla, in a sense, there were a lot of tailwinds, and those tailwinds were domestic in nature, which is that Cipla's total aggregate revenue, which comes from US, and if you compare that, let's say, with Lupin and what a Sun Pharma gets, Cipla gets a very large advantage in terms of the domestic pricing, and their reach is increasing, their portfolio is increasing. So they're a formidable large player in domestic market. Domestic market is where the growth is. But I guess a lot of that good news, I think, is getting baked in. Cipla was never a very cheap stock, but now it is trading way above the historical average. And as per the consensus number also, the upside is not there. 23 times for a business which is growing at about 15-18 times. Margins, again, not the best in the industry. One is better off, let's say, giving Cipla a skip or an avoid, and if you own it, I guess Cipla now runs the risk of underperforming. So at a time when large cap stocks in pharma are coming back, I think Lupin, Sun Pharma, and then Cipla. Or I would say Lupin, Sun Pharma, Dr. Reddy, and then Cipla. 2 months ago, I would have said Cipla, Cipla, Cipla.
Oh, well, yes, look at the 3-month chart. I think probably that's the time when we were discussing
started
it
talking
earlier.
about
So
it, yeah.
15% run up has already happened. So now the
It's not
pecking
going to be
order
a
has
multi-bagger.
changed.
15% is what you'll get in some of these stocks.
Yeah, which is fair. In 3 months, 15% is not bad at all, right?
Yeah, these days you get 15% in individual stocks every day.
That's
But
true.
that's dangerous.
But that's dangerous, exactly. But let's look at the other stock. In fact, pharma has been one of those underdogs which has been coming back, and so has the entire power sector. That's seen quite a bit of re-rating this year. And JSW Energy comes in the limelight because they're now looking at getting into those, renewables, the storage, hydrogen, etc. What's your take here?
See, it's a long cycle,
Yeah.
but this is the future. And any company which is migrating towards clean energy, green energy, and if they're doing it without raising a lot of capex, I guess those are going to be the watchwords for the future. Now think about it, what they're trying to do. They're moving into clean energy. They've got, at the family office level, Sajjan Jindal and his family office has taken major stake in MG Motor, which means they are essentially trying to do what Tata is actually trying to do in the entire EV system, which is that you are investing in a car company, you got a power business, you're moving towards EV, and you're trying to create an entire supply chain. If they are able to grow at the current run rate without diluting, and as per the analyst report, EBITDA could double in less than 2 years, I guess markets are not recognizing that. There is an old school thought, Anisha, with the power sector that, okay, this is a regulatory sector, they cannot grow because of the regulatory issues, and there's a state discom challenge here. But if there is one sector which I think has gone through massive transition at a policy level, state level, and at the central level, I think is power sector. And I'm surprised markets are not recognizing them. See, it's a complicated sector for average Joe to understand. So it's an institutional dominated sector. But again, I guess somewhere markets are not really taking cognizance of where they are right now versus where they would move. Just imagine 10 gigawatt becoming 20 gigawatt. How many of us have spoken about it? We speak extensively about Paytm, Zomato, we speak about a lot of other stocks, but I mean, these are high growth businesses of future. Green energy, clean energy, hydrogen energy.
Yeah, these are those, the stepchild treatment is what power has been getting of late, but at least coming back into the forefront at this point of time. And today as well, Antique has actually double upgraded the stock to a buy. So watching out for a couple of these stocks, Aisha.
Oh, yeah, absolutely. In fact, let's pick it up with Harendra as well. Harendra, I don't know if you caught Nikunj's analysis on the JSW group, but you think they could be the next, ones to capture on the energy transition happening in the world and in India in specific?
Yeah, absolutely. I think, the characteristics of the power utilities are no longer a utility, quote unquote definition. Because over the next 7 to 8 years, you're going to have tremendous capacity addition on the renewable space. But beyond the private sector, which is Tata Power, JSW Energy, there is a lot of action also happening on the the hydro companies such as SJV and NHPC. They're adding 3 times the regulated equity in the next 7 to 8 years on 14% ROE. A lot of private companies don't generate that kind of ROE. And if they manage to execute well, these stocks are all multi-baggers. So we've been at the forefront of having this conversation on power utilities with all investors, and even with respect to hydrogen as well. So I agree with Nikunj that the power space, energy, is going to lead a lot of conversations and investment ideas. And mind you, this is the pivot where the entire capex cycle also resides. Which is the energy transformation of India. So yes, it's still a hard pitch to investors at this given point of time, given that it's regulated and government is less glamorous. But yes, there's a lot of alpha to be made out there.
What, to your mind, is the best play, Harinder, in terms of if somebody wants to bet on clean energy? See, for Reliance and Adani, this could be the future business. But if a investor is, if an investor is buying into these stocks, you're also getting embedded value of a lot of businesses. Is there a clean play on this entire green hydrogen stroke clean fuel story?
So hydrogen is a game of scale. At the moment, only 2 large conglomerates have put their hat in the ring, which is Reliance and Adani's, who have gone out and said that we're going to bring it at sub $2 and we're going to play the entire ecosystem. And there are other groups who have come and had a conversation on that. But as far as our analysis goes, these 2 large conglomerates are going to lead the way. because they have an integrated logistics play. They have energy as the primary business, and they want to play the entire ecosystem. Beyond that, hydrogen, NTPC has also spoken about, but it's going to be a large players game. If you're asking in terms of clean energy, private sector, good name, I would say Tata Power. I think it's a phenomenal characteristics of a company which has ESG components, which has growth, and now which has multiple avenues in terms of charging stations, EPC for solar, a lot of embedded value in subsidiaries, or the opportunity to unlock value as well. So this is how you would want to straddle the power space, apart from some of the names that we discussed in the SJV and HPC earlier in the conversation.
Let's look at the power stocks. If you don't talk about it, yeah, we only talk banks, we only talk autos, but look at power stocks. NTPC, JSW Steel, to some extent PFC, REC, not in the power space directly, but indirectly. In 3 months, NTPC has given a 8% return, 9% return. But in last 1 year, 3 months, JSW, no, this is steel. JSW Energy, please. This JSW Steel. NTPC in last 1 year has given a 40% return. And let's look at JSW Energy, 37% return. Let's look at Tata Power. Now, Tata Power has a lot of other embedded issues also, but Tata Power has also given a 10% return. Harendra, why is that I don't hear HNI guys and retail folks talk about NTPC, Tata Power or JSW Energy? Everybody only loves to talk about HDFC Bank, ICICI Bank, Zomato, Paytm. Power सब use करते हैं, power का growth हो रहा है, and we don't talk about this sector.
Correct. So because there are a lot of skeptics in terms of the aggressive growth numbers the government has put out and whether the companies can achieve those numbers. Number one. Number two is a lot of value capture is happening in terms of the renewable subsidiaries even before the capacity has come up. This is a little difficult for fund managers when there is no immediate earning visibility in the sheets at the given point of time. So these they are not able to reconcile. Third, of course, these are slow moving sectors because capacity expansion happens over a period of 3 years, and the DCF captures it, on an incremental basis, on a every year, on a nominal basis. So the value capture is very slow, and this does not excite a HNI market, given that they want fast-moving, vertical climb stocks. So obviously, it's always sub-radar, the individual investors, and like you mentioned, it's largely for large investors who have a long-term and time as a variable on this side.
Coming in, just wanted to highlight a couple of counters. We were expecting big block deals on Sansera, engineering and delivery today. Seems to have happened already on the exchanges. So we're watching out for these two counters. For Sansera, it was a big block, almost 14%. The delivery was just around 2.5%. So those were a couple of counters. Separately, quickly, let's watch out for Wipro as well. The buyback opens today, so you can start tendering in your stocks for buyback today. We had done some analysis in terms of what kind of profitability do you expect to get. As we understand, for retail shareholders and small shareholders, which is of the value of 2 lakh and below, the acceptance ratio can be anywhere between 23 to 60%. And if you look at the net gains that you make out of that, that could be anywhere between 3 to 9%, depending on the acceptance ratio and, of course, the selling price, etc. ICICI Direct had penciled that the retail acceptance ratio could be 60%. You also had IFL talking about a 40% acceptance, and given the fact that the consensus Bloomberg target stands at around 390, most of the brokerages are recommending their clients to perhaps tender into the buyback. So we're watching out for Wipro as well. Quickly, Naresh, your take on Wipro as well as Cyient, because for Cyient the news flow is that the IPO size of DLM has been cut and Morgan Stanley today has downgraded Cyient.
So Wipro has been the worst performing large cap IT name if you look at it from the short term perspective and also from the last 2 years. The whole outperformance in 2021 has been taken out. The stock has fallen from 710 to almost 360, 370 levels. The problem is this is one of the only stocks which actually made a new low in March, April. A lot of IT companies held on to the bottoms made in September, October. So technically, it's a tough one unless and until it starts crossing 410 levels. So would be an avoid as of now. No trade, could continue to be in a sideways range. Cyient is something where one could be looking at booking profits. The stock has outperformed in a meaningful way in the IT pack. The stock had made a top around 1250 in 2021, and the stock today quotes at 1400, 1500. So it went up much beyond the previous highs, which is where the whole IT index stopped. And from the recent lows of 750, the stock has doubled up. So for now, the move is overdone for the short term. Could get into a sideways consolidation and drift towards 1300 in the short to medium term.
Bunch of other stocks which are going to be in focus as well. You know, Sansera block deal, of course, has happened. Delivery, we understand that Carlyle Unit is looking to sell that 2.5% stake, and it could be set at a floor price of about 358 thereabouts. So look out for that stock as well. Of course, the Shriram Finance, FTSE has announced its weight increase. Nuvama expects an inflow of about almost $19 million. So look out for a further up move after the bounce in the stock yesterday as well. And there's Shree Cement, you know, news just coming in that the IT department is currently, you know, they are actually siphoning through the Shree Cement premises, and as of now, they can't make an assessment at this point, but a survey is currently underway from what we understand. So that's another stock which is in focus. And by the way, Brent is back at that $77 per barrel mark. Crude prices have been on the surge, so you may want to look out for ONGC as well. But Harendra, at least in the near term, it clearly seems to be that NBFCs and insurance are the ones which are leading as opposed to banks, which are clearly on the back foot. Do you like anything out of this space?
Yes, we do. You know, on a headline level, the conversation is shifting back in terms of styles from value to growth. So within that, you know, one NBFC is Bajaj Finance. So I think most people bias are circumspect on its ability to transition in terms of the management change, plus the challenge from fintech, etc. But I think it's getting resolved in the minds of investors. And if growth is making a comeback that we believe it is, Bajaj Finance could lead the NBFC pack at the moment. We've seen a lot of mid and small caps rally, but I think it's time to again go back and pivot towards the larger names on the NBFC pack, and they could outperform small of the other medium-sized players at the moment.
I would ask you on Adani group of companies. I mean, it'll not look nice if you're on the show and if I don't ask you an Adani group of stocks, right, Harendra? Have they bottomed out? Is it a good time to buy into them?
You know, Nikunj, the way most investors look at that space is that they're some of the most fantastic infrastructure assets in the country. In terms of the resolution in their minds, how the businesses are run, I think there is no doubt about that. So, for example, the only other thing is they have to reconcile is in terms of the valuations. I think that's pretty much corrected, and it's business as usual, given that the Supreme Court's put a lid on the whole conversation. So my guess now you have to analyze the business on its merits. So given all what the brokerages have put out and including what I've used, I think Adani Ports sits on significant value, and then you have significant other slew of assets. But at the moment, I think the port business is shaping up really well, and there is value in the price. Cement, again, both Ambuja and ACC have always been on the radar of investors. The logistics play, cost-cutting initiatives and expansion should be on track. So I think sooner than later, these assets will also come back into investors' focus. That's our belief.
So let's understand that if you have to, let's say, bet on one Adani group of stocks for 5 to 7 years, would you bet on Adani Enterprises because that's the mothership? It has all the business which are incubated. Would you bet on Adani Ports, which is more like a toll bridge? It will keep on growing at 15-20%. Or would you bet on, let's say, Ambuja or ACC because that's where the turn will happen when the economies and efficiencies would kick in? What, to your mind, for 3 to 5 years is the best Adani group of stock? Because our viewers, Harendra, they'll only like to buy one stock. Give us that one name.
Yeah, so like I mentioned, we think the whole infrastructure space, if you want to encompass, it has to be ports. That's one stock that we covered. And of course, ACC and Ambuja. But, the cement space has characteristics of only compounding at 9%. But I think the whole port story will be larger and will be an integrated story. So I think that's something that you should look at given the valuation that it is now. If you're looking at an incubator at this game part, of course, it's Info Edge, I think, which will have all the characteristics of new gen businesses. That's how we would look at it on the overall market space.
Okay, so that's the take coming in. Info Edge is one of the other counters that you can watch out for. But Harendra, within the auto pack, wanted your take of where do you see value, both in terms of the passenger vehicles as well as two-wheelers?
Currently, obviously, it is, you are seeing the two-wheeler pack, which is TVS, which is doing well, and Tata Motors. So there is a pecking order in which the market is ascribing value. All have individual stories at this given point of time. But over the next 3 years, given what Maruti is doing, I would say that it has a long runway from here. We are quite enthused about the doubling of capacity that they're speaking about in terms of export as well, and the new pipeline launch. There is value in the business as well. So I think about 9,000 rupees as well, it would have significant upsides, at play on the auto pack.
Let's talk about some of the breakout counters as well, and the ones which are sitting above 200-day moving average. Naresh, Vijaya Diagnostics, that one has seen quite a bit of breakout, and Max Financials too is sitting above the 200-day moving average. Would you recommend a buy?
So Vijaya Diagnostics has moved up with the whole sector as such, and it has already moved up from 410 to 480, and that's a major resistance zone. So I would wait out here, but Max Financial looks interesting. The stock has seen a deeper correction compared to the rest of the insurance name. The stock from 1150 went down to 650, below 650. In the last two sessions, it has done a catch up. Around the budget day, when the whole trend started on the downside for insurance, the stock was at 850. A lot of these names like HDFC Life, ICICI Pru have gone beyond those prices as well. So at 730, 740, there is a lot of catch up to be done in Max Financials. So it's a buy at current levels, would keep a stop loss at 715 and expect a slow and steady move towards the 800, 820 mark.
Call Ramesh.
Okay, a bunch of other stocks which were big buzzers yesterday, and look out for what Motherson has been up to. Yesterday as well, it moved a good 4.5%. Almost 5%. Lupin, of course, after getting that US FDA okay for generic Spiriva, that stock buzzed up almost over 5% actually. And MFSL as well has been seeing quite a few traction in bits and starts. That stock as well held out by about 5% or so. Kunal, we know you've been bullish on Tata Motors for a while, but what within the auto ang pack do you like?
So I think there's Samvardhana Motherson which looks attractive. In fact, at 66, 67 is where we highlighted there's a change of behavior for the stock price. Now, the stock at 84, 85 levels where it closed yesterday has just come back to the last, I think, 1 year swing high for itself. So it's not yet confirmed a breakout of a multi-year chart. The long-term high or the all-time high for Samvardhana Motherson, I think, is at 175, 180 odd mark, which means that there's a lot of traction which the stock has to try and go into to try and really surpass those life high levels. But what the last 4 or 5 months of price patterns have indicated that this stock is or this trend is here to sustain. So I would be bullish on Samvardhana Motherson. In fact, there have been two minor dips in the stock price, almost a 7 to 8% correction on the stock price, something like what we've seen I think last week when the stock had corrected towards 80 sub 80 odd mark, and from there it's rallied back towards 85 plus levels. So I think these are the kind of dips which traders should be looking out to buy. Many of the other auto names, I think the traditional auto stocks, something like Hero MotoCorp is looking very attractive on the charts. Maruti, I would believe that in the next couple of weeks should get back into a rally mode back again and possibly head towards that life high of 10,000 mark. So there are a lot of stocks on the traditional large cap names as well as the auto ang space which are looking very attractive.
Okay, that's the word coming in on Samvardhana Motherson, Maruti as well, along with Tata Motors. But the pre-open rates are indicating once again a very, very flat start. In fact, as flat can be. That's what we're headed in for this Thursday morning. But Harendra, we let you go on that note. Good as always for you to join in. Let me take it across back to Naresh and Kunal and get in some mid-cap ideas going. That's considering that's a more livelier market nowadays. Naresh, what's on your mid-cap radar?
So looking at Samvardhana Motherson Sumi, the stock has given a breakout yesterday, good volumes also. 84, 85 was the resistance for the last couple of weeks and also the previous major swing high. Good price action, good momentum, stop loss at 83 and a target price of 100.
Right. Kunal, what about your mid-cap ideas?
I'll suggest a buy on GSFC. Now, many of these, fertilizers odd stocks, they had shown a very good rally in the first couple of weeks of the month of May. Then these stocks have gone through a consolidation. But I think now the prices have come back again on a breakout mode. Volumes are inching up higher for the stock. So would suggest a buy on GSFC. Targets of 176 on an immediate basis. Stop loss at 158.
Right. Okay.